Hi, everyone, and welcome back to another episode on the Endicott Invest channel. Today, we're going to go over Zeta Q4 earnings. So, if you guys watch the stream, you guys know they crushed it. But let's go ahead and dive more into the numbers. What I want to do too is first go through their previous earnings, as I feel like I'd give you guys some good tidbits and ideas of their newer earnings. It's hard to kind of gauge, in my opinion, how earnings were if you didn't know how the last ones were. Um, and so this is their Q3. They delivered their 17th classic straight beat and raise quarter of 337 million. They generated net cash of 58 million. Kind of go through a bunch of it. I've gone over this before, but again, I just wanted you to pay attention to the revenue number and the free cash flow as well. So free cash flow 47 million, increased 83% year over year, and a record margin of 14%. And they had a rule of 40 of I think they just met a rule of 40 essentially last quarter. Now, they gave their fourth quarter raise to 363 to 366 million. Um, and again, they gave their full year 2025 guidance of 1.273 to 1.276. Now, reason that's important is they dropped this 3 weeks later after that Q3 earnings. They dropped this in November 2020, November 24th of last year. But yeah, about 3 weeks after their Q3 earnings, and they increased their Q4 guidance to 378 to 381, so around a 380 midpoint. That was thanks to Marigold acquisition. They also raised their full year guidance to 1.289 to 1.29 billion in revenue, and again, thanks to that Marigold acquisition. Now, here is what they actually did for Q4. So they crushed it. They knocked it out of the park. Obviously, 18th straight beat and raised quarter. They delivered revenue of 395 million, almost 400 million, by the way, guys, which is insane. I didn't expect them to come in that high. Again, their previous guy was around 380 million, so they beat it around 3.5%, 4% on the revenue, an increase of 25% year over year, and exceeding the guidance midpoint by 14 million. Now, they also generated net cash of 199 million for full year 2025, um, and had free cash flow margin of 13%, so a little lower than last quarter, or I guess it's for full year. Now, the big thing, obviously, that we all were hoping for was they achieved GAAP profitability. So they finally, in the first quarter, hit GAAP profitability at 6.5 million, which is just, I mean, it's beautiful, right? I mean, I think we've been all looking for it for a while. And so just to see them hit it and finally have it there is great. What's even better, though, is they increased their full year 2026 revenue, adjusted EBITDA, free cash flow guidance, and got into an entire full year of positive GAAP net income, which is great. So again, it's not this one-time thing. It's not a one-off situation. They're guiding for it continuing to happen moving forward, and so we love to see that, right? I think that's really what we're looking for, and I think it's something super, super great there. Um, but yeah, great quarter. They knocked it out of the park. Um, yeah, I mean, really nothing else that could be said there. They got profitable by 6.5 million. A lot of people were thinking, and a lot of us were talking that might only be sort of like the Palantir and SoFi, where it's just a quick $500 million profit to say they got profitable and kind of call it a day. Not 500 million, sorry, 500,000, or like $1 million profit. But they came in to 6.5 million, which is much higher than expected from a lot of people. I know I gave that. If you guys were able to watch my video yesterday on expectations, 6.5 million is a pretty bullish beat on GAAP profitability side, which is great, and I'm glad they're guiding moving forward with that. Now, the other thing they increased was their full year 2026 guidance, which is also, I mean, can't complain, right? First quarter increased to 370 million at the midpoint, up 8 million from the prior guidance, which is a growth rate of 40%, by the way, which is insane. And as we know, they like to sandbag and give themselves a 2 to 5% cushion. And so this will probably be, they'll probably beat and come in at 385, maybe even 390 next quarter, um, and grow at 41%, 42%, which is nuts. It's just nuts. Um, Again, great to see. Full year guidance, they also increased that guidance. So it was 1.373 billion at the midpoint, and now the midpoint is around 1.755 billion at the midpoint. So a 25 million tick in their full year 2026 guidance, which again, as we know, and I'm going to say again and again with this name Zeta, is they always sandbag, right? So that guidance they gave to me, again, is just another sandbag moving forward. So again, that revenue or revised guidance represents a year-over-year growth of 35%, which is amazing. And they also increased their 2028 guidance to 2.3 billion instead of 2.1 billion. And they kind of showed through here representing a CAGR of 23% from 2024 to 2028. Now, again, like I said 5 billion times already, definitely a sandbag in my opinion. This will probably come in closer to 2.7 to 2.9 billion by the time we're actually there and it's all said and done. Um, but yeah, I mean, great. Just I mean, it's good to see, right? It's good to see the consistent increase in guidance, beating their numbers, and just slowly upticking and beating numbers there. I think it's very similar to a SoFi where they just consistently sandbag and beat, sandbag and beat. Um, but I'd rather have that. I'd rather have the conservative estimates and beat than come in and guys super high and miss, right? And so I think it's good to see. And I'm okay with it. But again, overall, super, super, super good quarter. Um, nothing to complain about here. Now, obviously, they increased their free cash flow guidance for 2028 to 371 million, with an applied margin of 16%. Again, this will probably come in closer to maybe even 20% by the time it's all said and done in 2028. Um, but yeah, guys, I mean, absolutely, absolutely crushed it. Just take a look here. Go ahead and pull up their fiscal AI. So if you look at annually, they did 1.304 billion for 2025, and 185 of free cash flow, which is awesome. And if we take a look at even just their operating profit, so as a business, they operated and had a profit for the full year of 2025 at 5.4 billion. We look at a quarterly basis, they had 17 billion in profit this quarter. They doubled their operating profit quarter over quarter, which is amazing. And just so you guys understand and why that's important, is GAAP net income is also taxes and depreciation and amortization, whereas EBIT, which is earnings before income taxes and all that, is the operating profit. And so that's really when you look at a business, obviously GAAP net income is really important for the S&P and for other funds, but operating profit is really what matters. That's the business to stripping away pretty much everything is operating at a profit, right? And so that's what really matters, and that's what I look for the most, more so than other things. And so that's something I want to just kind of be you guys to be aware of is operating profit almost 18 billion or 18 million versus 9 million last quarter, so they doubled quarter over quarter, which again is phenomenal. If we go ahead and pull away this, I want to go ahead and also show the. Oh, it's not showing the. I can't extend the guidance here, but again, they crushed it. I really want to also hop into the presentation because there are a couple bit of tidbits of information, and so we'll go ahead and hop into that next. All right. So I want to go ahead and go over their deck. There's a lot to cover here. I don't think I'm going to go through everything, every single slide, but there is a lot that I want to show here that I think it's just, I think Zeta does a great job breaking down a lot of metrics, which is another reason I love investing in this company. Is you kind of at a high level and a really detailed level, you can see exactly how the business is trending. Again, 18 straight beat a quarter, 18 straight beat and quarter, beat and raised quarter. Full year 25 revenue of 30%. Again, free cash flow growth of 78% and a 13% margin. Revenue of 395 million. So that grew 25% year over year. And full year results was 1.305 billion at 30% growth year over year. Cash from operations. So 47% versus 49% year over year growth. Just the EBITDA again expanding. So we see here it grew 35% last year to now 44% this year. That shows operational leverage. Same with their just the EBITDA margin. That was actually interesting. It went from 24.1% to 24.1 to 21.4. Huh. Um, Now here is something that's really cool as well is their customer count. So there's a lot of numbers here. I don't want to go over each one, but their scaled customer count increased year over year to 24%. Super scaled ARPU, so average revenue per user is 1.8 billion or million. There are also 9 of the top 10 verticals for more than 20%, which is great. Again, 16 straight quarters of 20% revenue growth and 20 consecutive quarters of expanding adjusted EBITDA margins. Now, I don't like adjusted EBITDA. So, it's cool to see. And I love to see that continue to grow, but I'm not the biggest fan of using adjusted EBITDA. 6 straight years of 20% revenue growth with adjusted EBITDA margin expansion. They kind of talked on that. The revenue CAGR for the past 4 years, so was 30%, or 3 year CAGR was 30%. Again, their 3-year adjusted EBITDA CAGR was 45%. Another big graph I'd like to see, and I kind of talked about this, is I wanted to see their 100K to 1 million. I literally talked about this in the video yesterday, and it's great to see that this is starting to get like got a big increase this quarter. I think this isn't being talked about enough. It's at the all-time high in terms of the customer count from 100K to 1 million. Because what I really care about and what I really wanted to hone in on is when a customer signs with Zeta, takes a little bit for them to spend money, but after 5 plus years, and go ahead and show a graph as well, they can continue to spend more money. And so what I wanted to see were the signs of earlier customer adoption. And so that's why this 418 is really important to me, because these most of these will become at least 1 million and then at least 5 million, moving forward. So it's great to see. Again, continued scale customer RPO expansion. So 625 million average revenue per user. So instead of, I mean, you can see it slowly uptick each quarter. We'll probably see a drop in Q1, but that's sort of cyclical, as you can see here. But it hit all-time high as well this quarter, which is amazing. Powerful revenue leverage as customers ramp to 1 million spend. Like I said, this metric is what I care about more because they will be this 1 million spend. I want them to get, you know, reach broad and wide, and then they will slowly scale those customers up. And so kind of going a little bit down market. I mean, again, 100K to 1 million is not down market, so to speak. Like it's not SMB, it's not small and medium sized businesses, but it's still, I want them to go down more market. I think it's super important to me. This is the slide I was talking about. And this is probably one of their best slides just to get an idea of where the company's heading. So again, like I said, when a customer has come in and they're under a year old, they only spend around 700K. And after 5 years, the average customer spends over 3.9 million with them, and the year before was 2.8 million. And so we can see the longer they stay with Zeta, the longer a client stays with Zeta and within their platform, the more and more and more they spend, which is what you love to see. Where that shows that the platform clearly has value. The platform clearly is entrenched in these companies, and there's switching costs become higher and higher and higher. And so that's what creates what we call a moat, right? And so that's what's super important to see for me, and something I really wanted to hone in on. Now, again, they're well diversified across a range of verticals. Now, there is an older graph of last quarter. I believe consumer retail was 22%. Travel and hospitality, I think, was only 7% a while ago. So now that's second. But just broadly speaking, um, again, 9 of the top 10 verticals grew greater than 20%. Broad coverage across 15 different industries, which is great. And this is the other side I really wanted to talk about. Remember yesterday when I posted the video, it was 44% of the Fortune 100. Now it's 51%. So again, 7,500 Fortune 100 companies last quarter, which is, I mean, that's great, right? That's a 20% increase in the Fortune 100 companies quarter over quarter, which I think isn't really talked about enough. As well as on the call, they mentioned that it's 24% of the Fortune 500, which is 120 Fortune 500 companies use data. And keep in mind, guys, this is a $4 billion company. Just going to throw that out there. Insane, by the way. Now, again, this is their 2028 guidance we talked about, 2.3 billion. Their free cash flow of 371 million. They upped their targets for all of this, as we saw last quarter, and I think they'll just continue to upgrade this every quarter, probably moving forward. And so this could even surpass 3 billion by the time we hit 2028, which would be crazy. Now, this is a new slide here where they talk about their evolving KPI to reporting to 1 million plus scale customers, super scale customers. And so you kind of can see some more data here. So in 2020, at least 1 million customers represented 70% of value. Now in 2025, at least 1 million customers approaching 90% of revenue. And you kind of see where that's going. Again, more of their metrics. So from 2021 to 2025, 30% revenue CAGR, 75% free cash flow CAGR. Yeah, I mean, they crushed it, guys. I mean, here's more of their guidance. Again, full year guidance was 1.755, which is a 35% growth. I think they're sandbagging. This is probably going to come in at 1.8, 1.85 when it's all said and done at the end of the year, which is like 38% growth, which is nuts. Doing it profitably as well. That's the important thing, is now we have confirmation of profitability, right? Like it was always a speculation. You weren't sure. Now they're profitable, and they guided for continuing to be profitable for the full year. Now they didn't say specifically that each quarter they're going to be GAAP profitable, but they did say for the full year. So it's interesting, in my opinion, that there could be, maybe they're trying to just be conservative of maybe next quarter or the quarter after they have some related expenses, and so they miss it. But for the full year, they're going to be profitable. which is super important to me, is they're growing like this and doing it profitably, which is great. While SBC continues to decline, that's something else I want to touch on too in a little bit. But again, first quarter 26 at the midpoint, 370 million, so 40% growth year over year. And they actually, funny enough, I didn't even realize they broke out each quarter of the cadence. So 2Q 35%, 3Q 37%, and 4Q next year 29%. And so for the full year 35%. I didn't even realize they broke it out into quarter. That's awesome. Um, they did the same with their. Oh, never mind. I see. They're breaking out their Marigold enterprise business revenue. So they're guiding here with saying that Marigold is going to be flat for the next 4 months, which is nuts. Um, but yeah, guys, I mean, great quarter. They crushed it. I really want to hop into just some valuation metrics to give you guys an idea of just, in my opinion, how undervalued this company is. Um, and just, yeah, just how cheap this company is. So let's go ahead and hop into that. So, like I was saying, I want to hop into the valuation metrics just to give you guys an idea of I just think how undervalued this company is. So I think the best comparison, honestly, in this space is the trade desk. Reason for saying that is obviously they're not the exact same platforms, but A, they're in the same industry. B, they actually are, kind of converging to similar margin profiles. Now, trade desk is obviously more profitable and they have been for a longer time, but they don't have crazy margins like an AppLovin, which is in the similar space. And so I wanted to give a good comparison to, I think, a company that's a pretty fair valuation comparison here. Now, Trade Desk trades at a 4.1 price to sales, Zeta at 2.7. Now, I don't know if that accounts for Zeta's 15% move today, um, but I do want to just call out that like Zeta's undervalued here. And so if we go ahead and also pull up revenue, so total revenues for both companies, um, quarter over quarter. Let me go ahead and remove the price of sales. So again, Zeta does about half of what the trade desk does in revenue, yet the trade desk is valued at 40 billion and Zeta is valued at 4 billion. Something to keep in mind. It's interesting, right? If we also look at, let's say, operating margin. So obviously this is going to be a lot different. So trade desk is at a 21% operating margin, very good. And Zeta is now, after this quarter, at a 4.5% operating margin. So obviously you can see Zeta's trending in the right direction, being -6 to 4.5. It seems like at a minimum, in the past 15 quarters, it seems like Trade Desk trades around this has an 18 to 16 to 18 operating margin. And so I'm really curious to see where Zeta goes as well. But yeah, Trade Desk is a $40 billion company, guys. And Zeta is a $4 billion company. And so I just wanted to kind of just touch on a little bit, kind of give you guys an idea of like why I'm so bullish on Zeta. It's not just that the company is really dominant, but also just the valuation itself. We take a look, just to give you guys an update after earnings. The stock ran almost 13.5% today. And overnight, it's actually up almost 5%. So clearly the market reacted, or well, either A, the whole market as a macro went up a lot, but also after hours, the fact the stock was up 13.5% today and still went up another 5 is super bullish that the market really likes Zeta earnings and is starting to kind of see the vision with the company. And so it's super exciting stuff. But overall, they crush earnings, gap profitability, which is awesome. It's kind of the main thing I was looking for, and they guided for it for the full year, which is great. Raised guidance in every single metric you can think of: adjusted EBITDA, free cash flow, revenue, for 2026, for 2028. And so this company's running in the right direction, right? A large part of investing is finding those, you know, valuable companies, but also just patience, right? We see them trending in the right direction. All we have to do is wait. Um, and so I think that's a big thing. I just wanted to kind of end it off with. Now there was a few quotes on the call that I wanted to bring up before we hop off here as well. Is super bullish call as well. I think they had like 7 or 8 analysts on the call, and they asked a lot of questions, and so it was super good call as well. For reference, now too, Zeta trades at a 2x price to sales for 2026. Just I mean that's just nuts. They traded a 2 times for 2026 sales. Just just insane. I don't really understand how it's even at this point, but hey, who am I? Who am I to say? Um, Now again, this beautiful chart, finally, net income profitable we saw here in Q4 of last year, there was a little blip of profitability. Um, but yeah, I mean, they're finally profitable, which is great. Now, couple quotes here that I thought was really, really interesting. Um, that we expect to remain active buyers of our stock, especially at these levels. And I put management likes the stock. So clearly, management is kind of hinted that they're buying the stock right now, if not have already bought the stock with their buyback program, which is great. Um, they also said in the call their NRR hit 120%. For last year was 114%. So again, that's trending in the right direction. And the last one I really want to hone in on is obviously, as we see, this market is really scared. Every software company is scared of AI. AI is going to replace them. AI is going to replace them. What about the license model? How are you going to charge per seat now when it becomes the whole way the SaaS is going? And I feel like Zeta did a good job to address this quickly on the call and said, we charge per action, not seat. Whether it's human or agents, regardless of how AI future looks, we're in a good position for durable growth. And I love that they honed in on that. It's because we see names like an Adobe, they're moving to more per action as well, or per pay as you go. But kind of like a Salesforce, like other platforms that have a license or seat based model, there's a lot of stuff that could is not durable there, right? I mean, that's going to be worn away in my opinion. And so I'm glad they came on and kind of said, hey, we're charging per action, not per seat. So don't worry about us. The growth and the guidance we have is sustainable and it is durable. And so again, I think it was a great thing to point out. But yeah, great call. Appreciate all of you watching today. I think I had almost 70 people watching the stream at peak. So again, thanks for the support. Zeta crushed it. Super good earnings. Now it's just about patience, right? We'll see how the market reacts tomorrow. The stock is currently 1770. So maybe we cross 18. We did a little bit after hours. We'll see. Maybe tomorrow we cross 18, maybe even 19. And we'll see how it goes. Again, appreciate the support, and I'll catch you guys on the next earnings. Peace.